So will the world reach net zero by 2050? No idea is basically my answer. It's such a long time off in terms of where we stand today. But what we do know, what we can accurately forecast, is that there's a huge amount of momentum towards achieving that goal. So when we talk to companies from the bottom up level, we want to understand what are they going to do in the next 5 years to try and meet those ambitions that governments, that citizens are looking for this crisis that we find ourselves in, this climate change crisis. I don't have to talk to Sydney-siders about how unusual the weather has been, or parts of New South Wales that have experienced 1 in 10,000 year weather events in a couple of weeks, or talk to people impacted by the bushfires. So it's very clear that ambition is important, net zero by 2050, but we want to understand which companies are going to be current and future leaders on a positive change journey to assist the world in meeting those ambitions. Isn't it amazing that Russia was involved in the oil price going negative during 2020, and now obviously on the other side, Russia is having an impact in oil prices in particular, shifting much higher. Not only oil prices, but commodity prices in general, the commodity complex. It also reflects not only strong demand, but supply being restrained. So when the world entered into lockdowns across the world, you saw many producers start to scale back on supply. We're feeling the impact of that now. Now, high prices, inevitably what you find in a market economy, particularly for agricultural or hard commodities, is that supply will respond. The price will act as a signal for farmers to produce more, or for oil companies to potentially extract more. Now, the Firetrail S3 Global Opportunities Fund, we're focused on companies with a sustainable edge. We don't invest in the old fossil fuel producers, but you can also get exposure to some of these thematics via companies that are helping the world transition to cleaner energy sources. For example, biofuel producers. So one company that we own in the portfolio is a company called Darling Ingredients. So Darling Ingredients uses used cooking oil. They have relationships across North America with 140,000 restaurants. They dominate the used cooking oil market. So they have the ability to extract 40% of used cooking oil from these restaurants, and they turn it into biodiesel, which is a chemical replacement for traditional diesel. So across North America, you found that these barrels of oil are so valuable that they're starting to be stolen. So you can go on YouTube and you'll see news reports from local news reporters highlighting that restaurants are having their old oil stolen because it is a very valuable resource in biodiesel. So Darling Ingredients, for example, is one way that you can invest within that thematic of rising energy prices, but you can invest in a company that is enacting positive change, rather than a company that is extracting old fossil fuels. Well, it's really difficult to forecast how long commodity cycles persist for. And I'm sure if you talk to the Australian Treasury, for example, their forecasts for the iron ore price are almost always wrong. And particularly, who could forecast a global pandemic? Who could forecast an invasion of Ukraine by Russia? But that's the main impact on the market at the moment, particularly in commodities, is this conflict that is ongoing in the Ukraine. Now, there are a number of plausible scenarios that could occur there, and we have no edge in forecasting what might happen, whether the conflict continues, whether it escalates, or whether there is some form of truce entirely. And each scenario will have a different impact on commodities in particular. If you maintain the status quo, well, then it looks like supply disruptions will be maintained, particularly for oil and energy and gas, as Russia is a major producer in that sphere. And high commodity prices will actually accelerate the transition for governments to more renewable sources of energy for their economies, and try and extract themselves from the old reliances that they've had on, say, oil and gas manufacturers and exports. So with that in mind, you're actually seeing a significant tailwind behind renewable sources of energy, whether that be wind, whether that be solar. So it's a really interesting dynamic that's ongoing at the moment, and really Europe will probably lead the charge on that shift from fossil fuels to more renewable sources of energy. So one of the commodities that we think could potentially have much more room to run is copper, given how vital copper is in the decarbonisation of the globe, and copper found in wind farms, EVs, solar. So again, if you're looking at which companies could potentially benefit from a higher copper price, Antofagasta, a Chilean copper miner, a company that has invested heavily in desalination plants. It wants to be renewable, has long mine lives, great relationships with the locals. This is a company that can benefit from higher commodity prices whilst being a very important component of that shift to a more renewable world. So that is one way that you can think about, how can I get exposure to a commodity via a company that has very, very strong demand fundamentals and supply hasn't responded as of yet. So another commodity that could potentially have further room in terms of price appreciation is an agricultural commodity, soybeans. So soybeans have benefited from the run-up in wheat prices as farmers have shifted their feed for their livestock and their herds from high wheat or the high cost of wheat into soy meal, for example. So if you want to think about the devastation that the swine flu had on the livestock, particularly of pigs and hogs in China, the Chinese are rebuilding their swine stocks, and soy meal is a significant component of that. So in our fund, the Firetrail S3 Global Opportunities Fund, we own a company that is exposed to soybeans in particular. So it's called Archer Daniels Midland, or ADM, based in the US. And what this company does, ADM does really well, is crush soybeans to produce oil for biodiesel, another important component for a renewable source of diesel, which has also appreciated significantly. So ADM is benefiting from the run-up in soybean prices. It crushes the soybeans to make for oil, and the soybeans that are then extracted can also be sold as meal for livestock and for agricultural uses. So we think there is a company that will greatly assist in the energy transition, a company based in France called Air Liquide. It's the second largest producer of industrial gases globally. So industrial gases have many usages, from healthcare in terms of oxygen to also the production of semiconductors. Now the opportunity for Air Liquide is that their top 30 clients emit a huge amount of carbon dioxide into the environment. And much like the rest of the world, they want to become carbon neutral. They want to reduce that, but it's very, very difficult to do. So what Air Liquide is doing is investing heavily in carbon capture technologies and to assist their clients, those big clients, to hopefully reduce their carbon footprint. So they're investing very, very heavily in those carbon capture, carbon storage type solutions, and it could represent a significant market opportunity for them. Many times, we estimate 8 times larger than the industrial gas market. Looking at where the price of carbon is today at 80 euros, for example, in Europe, it could represent an $800 billion opportunity, €1 billion opportunity for Air Liquide.